Well, hello, everybody, and welcome back to the Dash Trader Newsroom. This episode is called The Summer Rush or Melt, Possible Winners and Losers of This Summer. And as always, my name is Michael DeGioia, Director of Educational Services and Licensed Professional here at Dash Trader. I'm joined by my co-host, Jill Malandrino, Global Markets Reporter from Nasdaq. Jill, how are you today?
Good, doing well, Mike. Good to see you again.
Great. And again, it's the end of the week, thank God, and start of the weekend. And what's going on in the news is the specter of inflation is no longer a specter. Oil prices seem to be rising everywhere. Tech is selling off as inflation becomes a real concern. And how will this affect the markets? Usually inflation has the worst impact on tech and has a good impact, or at least it helps benefit as capital flies to safety and looks for value. So Jill, what are your thoughts on the problem or the worsening problem of inflation, which got a lot worse on, when we talk about the pipeline situation with oil? So what are your thoughts about inflation?
Yeah, I think what the issue is just how sustainable this path can be until we start to make some monetary measures, whether it's through the Fed or through the Treasury. I just think what the pipeline situation showed this week is how vulnerable we are, and the swift impact that it has to supply as well as it does to prices at the pump. And it could be a pipeline or it could be a food chain supply as well. There's a lot of vulnerabilities in the system. Cybersecurity is an issue. Food safety is an issue. So I think these are all things that longer term need to be looked at. And this is why part of the stimulus package is to include training to get cybersecurity and food supply chain and all these other things that are predicated on some sort of supply chain, that kind of training into the system, which is really important going forward, because I think our biggest threat is going to be cybersecurity. And we've certainly seen that play out in a number of different ways over the past couple of years. On the other hand, this isn't like inflation or interest rates that we saw in the late 80s. So I think we have to put that into perspective. I think what the concern is, what's spooking the market, is just how much money and how much liquidity is out there, which is something that we have not seen to this level, to this extent, in other years past. So while we knew inflation was coming, it's almost like, when a gun's going to shoot and you hear it bang and everybody jumps, it's kind of the same reaction. Like we know this is going to happen. We expect a noise when a gun goes off. So, there's going to be some volatility around it, but my feeling is longer term, once we get through these pockets of volatility, that we're still, the economy is getting better, earnings were fantastic, companies are growing, even as we get to the other side of this. So I think this is just going to be part of the cycle.
Yeah, certainly is an interesting time, and I say that as our next piece of news comes out, which is oil prices rise as the ransomware cyber attack on the Colonial Pipeline, which serves 17 states. This added to inflationary concerns going into the summer. Now, this sounds like an episode of Star Wars. The group that orchestrated the cyber attack was called the Dark Side, and they shook down the Colonial Pipeline for what appears to be $5 million, which was paid in the ransomware attack. And now it has driven up oil prices to the average price of oil around the United States is now over $3 a barrel. And we haven't seen the oil price, gasoline price above $3 a barrel in a number of years. Is this a sign of what's to come, Jill? More cyber attacks. This would look to me like the Dark Side was fairly successful. They shook down the Colonial Pipeline for $5 million, probably in Bitcoin or Doggy Coin or Dogecoin, whatever you want to call it. But certainly this looks like a successful cyber attack. It might encourage more.
Yeah, it was some sort of altcoin, and I've been kind of listening to the news on and off today in between hits, and apparently the Dark Side is shut down now. So I guess whatever retaliatory efforts President Biden was talking about yesterday, perhaps, I don't know, because I haven't been following the story completely, but they have had some issues within the Dark Side community from what I've heard on and off. But Again, we had massive cyber attacks with the government last year, right? We've seen it happen in a number of major national retailers. So this is a problem that is not going away. And like I said before, like this is going to be our biggest concern. I think these are the things that are going to keep companies and governments up at night because it does show the vulnerabilities. And I think part of the issue we have when it comes to government and cybersecurity, there's just not a consistent strategy across the board, whether it's on the local, state, or federal level. And we've seen cyber attacks and ransomware attacks on the local level as well. So I think it's a matter of having it consistent, and it will certainly be a private and public sector project. It's definitely, you can't expect one side or the other to exclusively manage this. So it'll be interesting to see, even when we think about it from a trading perspective, what companies will benefit from this. I mean, you have your obvious cybersecurity companies, but I think there'll be a number of others that are in play too. Because like I said, the biggest outliers that are out there are clearly our energy chains, but food supply chain is another big one that I think we really, and water supply and everything, are just things that we, this is the world that we live in, and things that we need to be aware of. But from the trading investing perspective, of course, there's going to be opportunities there.
Yeah, and I'm a little skeptical about the dark side being shut down. I mean, yeah, of course, the dark side sites will probably be shut down as they are located in Eastern Europe. They are located outside the jurisdiction of the United States. So I know the president has to say that the dark side has been shut down, but they'll be back as, the Darth Vader or the evil empire strikes back. I don't know. But I mean, they're outside the jurisdiction of the United States. They were clearly located in Eastern Europe, either Estonia or Latvia, potentially even the Ukraine. Nobody really knows where, but definitely in Eastern Europe. And but it looks like we have a lot of problems such as this to expect in the future. It's really hard to deal with these problems that originate outside the borders of the United States of America. I guess the government has no choice but to kind of deal with other governments to kind of lock down on these guys. But it's definitely a problem going forward, and it's something that we have to try to protect against. So now this one's very interesting. I mean, it almost coincided with the top of the market, what's going on in Israel and Palestine. And it looks like all of the peace efforts that have been worked on for the last 2 to 3 years have just gone out the window in the last 2 to 3 weeks. Israel and Palestine, the conflict is worsening. What are your thoughts about the impact on the markets, Jill, as it relates to Palestine and Israel? I mean, Palestine obviously doesn't really have a large corporation base, but certainly Israel has many, many corporations located in Israel, biotechs, technology companies. I mean, there is a number of companies, like Teva Pharmaceutical, just to, think of one, but there's probably about 50 companies that are listed on the New York Stock Exchange and Nasdaq that are Israeli-based companies. What are your thoughts on the impact of this ongoing and worsening conflict, going into this summer?
Yeah, well, I mean, of course, the innocent people on both sides of the conflict, those are the ones that unfortunately get the brunt of this, and that's really where my heart goes. But you're right, there are a number of very innovative companies on the biotech and tech side coming out of Tel Aviv and some other metropolitan areas of Israel. In fact, I had the chairman of WIX, WIX, on my show yesterday. And just before we came on, he posted a picture on Twitter where you could see whatever bombs, not bombs, but I don't know the terminology, but it almost looked like flying stars in a bright blue sky. I guess they rocket interceptors or whatever. I don't know. I don't understand the terminology. But the point is, you were able to see the conflict happening in the sky just moments before he came on the show. So, we've been through 9/11 here, but we have never been through a prolonged conflict on our home turf. So I can't even imagine what it's like for families that need to endure this. But you're absolutely right, Mike. And I think part of the issue is a lot of companies, you always have that political risk when you are investing in companies that are in heightened areas around the world like that. And, it makes the investment case really challenging when people have to be concerned about their assets and their people and their technology in conflict zones around the world. So, there's a couple of things at play here, but you're absolutely right. It does make the biotech and tech sectors a bit vulnerable there.
Yeah, and I mean, and I have to reiterate that my heart goes out to both the Israeli and Palestinian families that are being uprooted and disturbed by this ongoing and worsening conflict. I mean, it's just, it really is a very, very tragic. So that's that for me, that's the most important thing, is that it ends quickly, and hopefully, I just can't imagine how a company can operate well with constant interruptions by rocket barrages and anti-aircraft fire. I mean, that's what it was. It's anti-aircraft. Israel calls it the Iron Dome, and that's the anti-aircraft fire. And there's something like 2,000 rockets that have been fired off from the Gaza Strip and now from Lebanon as well. So.
I mean, how do you send your kids to school? You know what I mean? Like I'd be a wreck sending my kids to school. So exactly. You're right. That's the tragedy out of all this.
Crazy. All right. So let's talk a little bit about our third place winner and my former student. My God, it's great to see you, Mr. Todd Miller. Todd, how are you?
Oh, I'm doing well, and great to see you, Mike and Jill. Thank you.
I'm so happy to see you still at it and looking to come back to trading. I trained Todd back in 2011.
That's right.
A little break from trading for a while, and I guess you're honing your skills before you come back into the market in earnest. So tell me a little bit about your trading experience and about how you approach the competition. And what setups and what have you been looking for? I know that you are primarily a gap trader, so tell me a little bit about your best trade, and certainly just tell me about what you found to work for you.
Right. Yeah, that's exactly right. I first started getting into trading 2004 to around 2002 to 2004 in Chicago. We used a completely different strategy. That was based on scanning the New York open book for large block trades and trying to front run those for quick profits. And the SEC did away with some of the synthetic options that we were using to be able to short against the box. And I had to look kind of elsewhere for a different strategy. And fast forward to
you're a pretty professional trader. I mean, you were trading quasi-professionally in Chicago using that strategy, and then you had to retool yourself. That's pretty interesting.
Yes, we did. Life took me out here to Denver, Colorado, and I found you and Affinity Trading Group and took your coursework. And we primarily, focused, and I focused on gap trading in the morning, earnings and news-driven gaps. And I would say that, it was a great education. I unfortunately couldn't continue, for some reasons in trading, and that's what you kind of end up finding out is there's times that it's good to trade, times when it's, you can allow yourself to trade, your life can allow yourself to pursue that, and some things get in the way, and, you have to take some time off. So, I used the trading competition to kind of gauge my interest and my level of experience, if I still had it, to get back involved with trading and trying to do it, for a living, for part of a living. So I really do enjoy the trading gaps setups, especially ones that might be going against the market. The market is, the particular trade. One of the particular trades in the competition was eBay's earnings reports the day after they had reported. They were down sharply, where the rest of the market and the rest of the tech sector was up dramatically. And for me, that was almost a perfect setup where, people were going to be rushing out of that trade and into all the other trades, kind of leaving it behind.
Yeah.
And it traded, it opened, in like, I would say free air, or I'm not, but just in a space where there was really no support until the 200-day moving average, which it traded down to. So that ended up being my exit point, was when it hit long-term support. So
that was the trade that really put you into third place in the competition. And what's even more interesting is in this competition, we only had 3 profitable traders, because the market, with the added volatility of inflationary concerns, this was a very, very strange competition for a novice competition, day trading competition, where we did not have many profitable traders. If you were profitable and green, you were in the top 10. And the first place winner, second place winner were pretty handily green. You were profitable and green, mainly due to that eBay trade.
Yes.
And that was a classic gap trade. And it puts you in the winner's circle. So good for you. Jill, do you have any questions for Todd about his trading, or any comments or considerations?
I have a couple questions. So Todd, it's interesting. I take more of a fundamental approach to the markets. When you are looking at different stocks, do you have a basket of stocks that you know from a technical perspective that you just trade really well, or you know their historical patterns or so forth, or are you company agnostic? It could just be a setup that you see that gets your interest, or they're like a basket that you just know really well.
It's a little bit of a hybrid of both. I do have a kind of a large basket based on stock pricing, volume, historic volatility, and historic, like how good of a stock it is to trade. There are some stocks out that just don't behave that well, and they're not good day trading or gap trading stocks. And then, it really doesn't matter. It's almost, in the morning rush period of time, the hour before the market opens, I just really look for a pattern, that really stands out. And then if it also kind of fits into, some other criterias, then it really rises to the top of one of the few positions I'm going to try and take, or trades I'm going to take that day.
That's interesting. And then I have another question for you. Did you trade any of the Wall Street bet stocks like GME or AMC? I know you put a lot of homework into it. You know what I mean?
Yeah.
I everybody has, it's great that people are making money, but I feel like for someone who's as disciplined and methodical as a trader as yourself, I would imagine on a normal day that those kinds of stocks wouldn't fit your criteria.
Yeah, but to be honest, right? But to be honest, and I think it's really based on all the experience I've had in the different trading groups and portfolio management. I've never traded Tesla. I never traded GameStop, AMC. I didn't trade Dogecoin. I just do not trade some of those, headline stocks. I was talking with, other friends of mine that would say, hey, did you download Robinhood? Look at this app. And, oh, we're getting into day trading. And it reminded me of the .com craze and bust, which I was a stockbroker during the time. And, I lost my entire client book during the bust. And I kept telling them that this market is the easiest market that you're going to trade in, for those types of, let's say, inexperienced traders or people just getting into it because they don't really, know the markets like we do. And it's better to miss an opportunity than lose money, is what I usually say. So you just really be patient and you wait for the setups that fit your criteria.
I think that's amazing advice. You should be teaching these courses one day. But I think hitting singles and doubles will keep you in the game longer. It'll keep you rational. And like I said, if you want to call it democratizing access to all, and all these apps are available, it's great. People are getting interested in the stock market and hopefully thinking about it from a longer term perspective, not just what you can do, in the next 6 to 12 months. It's a good thing. We want people invested and having, control over their longer term finances and retirement and so forth. But I think you make such a great point there. And Mike, to your point before, when you were saying it's really interesting, this is the first time in a while that I think we're only 3 green out of 10 traders or whatever the metric was. We haven't seen that in quite some time. And exactly to Todd's point, this is, the past year could have been the easiest market because everything was going in one way and there was tons of volume and everyone was kind of trading the momentum. But fundamentals and earnings and the economy and all these data points that come out do matter in the long run. So I think that's a really great point that was made. I think it's great to think longer term. And of course, if you have the appropriate amount of disposable income, you want to try it or whatever, outside of your other trading accounts, I think that makes sense. But I'm just so happy to hear you say that.
Yeah, I couldn't be happier as well to have one of my former students here in the winner's circle being numbered in the traders competition. And then he comes out and says all the great things that I've taught about over the years, which is to trade your strategy. Don't trade what's hot. Trade your tactic. You can only control your interaction with the market. You can't control the market. You can only control your behavior as it relates to the market. And a lot of times, the hot stocks like the Dogecoin, hot cryptocurrencies like Dogecoin or AMC or, Nokia, GameStop for sure. These are the most difficult stocks to trade because they're supercharged by everybody's interaction with them. And, traditionally I've stayed away from them. Yes, you can make a lot of money from them, but usually that money that you make from them is a loan until you give it back. And usually when you pay back a loan, you pay back with interest. So certainly a good lesson from Mr. Todd. Todd, great having you on the show. I look forward to you being the #1 winner next time around in the competition. And certainly I think you're ready to go back to live trading and return to the financial markets. This was a great test of your skills. And I want to point out one last thing is that, one good trade, your eBay trade is what puts you into the winner's circle. One good trade is all it takes. Abstaining from low odds trades is sometimes the best thing you can do. Not losing money certainly is helpful. So a good spin on that as well. Todd, you're certainly welcome to hang out for the rest of the show. Jill, I want to wish you a wonderful weekend as I jump off and continue the show. If you want to stay around, great. I'm going to talk a little bit about our #1 first place winner, best 536, Mr. Luca. Luca is from Luxembourg and is in accounting. His experience is he's been invested in the capital market stocks and derivatives since his university days and has recently been drawn to day trading. He considers himself a beginner. Preparation has been preparing a daily watch list in the morning. That's his critical step. His strategy is considering that overnight position, considering that overnight positions were not allowed. He was looking to start to short the biggest runners that had hit daily resistance around proven signs of weakness, maybe failure to make new highs. Less favored scenarios was when the change in the trend had already occurred and he was just trying to kind of pick up on the existing trend. He was looking for a bounce to open on some short positions. His biggest mistake was not sticking to his initial plan. Obviously, every plan needs to stay in contact with the market. Cutting losses at certain levels was also a big problem for him. Cutting losses is usually a big problem for all traders. He learned to cut losses quickly and avoid overheated stocks, micro cap stocks with the 80-minute, the 100-minute, and the 120-minute plus volume. That's what he was looking for in terms of time frames. It's almost impossible to get a good entry due to the erratic movements of these low volume stocks, these illiquid micro cap and small cap stocks. So very, very good insights from Mr. Luca. So a big congratulations to all of our winners. Stay informed about future #1 best trader competitions On social media, #1 best trader. That's at onebesttrader.com, Facebook, Instagram, and Twitter. DAS software updates, montage window added. We added the range market stop order, which is a way to support the range market order, trigger at market order for both sides. That means you could put a stop and a target in on your position, which is a very, very important feature for traders who want to step away from their screens, go to the bathroom, take the kids to school. You can put your range market order on there. Added range selected alerts, and you can delete them as well for selected timeframes and selected multiples. All those in between will be deleted. Options chain window improvements, improved loading speed, options chain window. We've added back the level 1 font color, so you can configure the font color on your options chain window. Quote replay, adjusted to make the time scale more smooth, so you can replay your quotes on the dash trader, so you can practice your strategies when the market's not open. Fixed montage highlighting, which I'm going to feature here in just a few seconds, and market order errors, market maker errors. So it cleans out the market maker errors very, very quickly. Added options account risk parameters, fixed montage level 2 scrolling, and fixed the flickering bug. We added the high trend line hotkey to the high trend line. So we have a whole slew of new updates to our dash trader. So I just want to show here and illustrate one of our newest features. This is the market montage. And what I'm going to just show here with my laser pointer is that now you can highlight. Now, if you see here in the ARCA book, we got 6,400 shares. So one lot of shares is 100 shares. So these are small lots, but we can see that we've highlighted in black with a white font color that the ARCA book is showing 6,400 shares at the 39.50 price level. The next biggest order is down at 39.42. That's 2,100 shares. And then the next biggest order is down here at 39.23, 1,000 shares, which I would say is not that big at all. Our resistance in our level 2 on our ARCA book is 10,800 shares at 39.86. Now, if you notice, we got 30 cents between our two biggest orders that are being displayed in our level 2. Now the dash trader allows you to very easily configure the space between the market montage. So you can configure your highlighting so that you can very easily see the large orders in your market montage or level 2. Other thing that we've added is we have a new configuration.
Hey, Todd, I think Mike's battery just